Good morning, everybody. Hey, welcome to Friday, December 27th. And since this will be my last day of on the radio for this year of 2019, I want to wish everybody a happy new year in 2020. And Charlie's here too, and Charlie wanted to tell you the same thing. Charlie wanted to say happy new year to everybody too. So we're here working from home this morning and trying to get some last minute stuff done before the end of the year. So hey, I want to thank you for joining us today. Dave will be with us here in just a few moments, but it's very important, and I'm very thankful for all you folks that have continued to watch our Facebook post every day. So with that, we'll wait for Dave here, and we'll get started in just a moment.
105.7 Light FM. That's the band Perry there. Hey, good morning. It is 70 degrees now, still cloudy, and there's a 50-50 chance of rain today. So carry an umbrella when you go to work this morning. You'll probably need it on the way home. Best chance of rain, as a matter of fact, in my hour by hour, is between 4 and 6 p.m., just to give you fair warning. Time to check in on your money here and see what's going on Wall Street. It is one slow news day today. The news is being made by the indexes because, well, they're still on their way up. We're having a Santa Claus rally. I won't say of epic proportions, but definitely healthy. Let's head down to say hi to Phillip Statler from Statler Financial Services in downtown Sebring. Morning, Phillip. Let's see, Dow 28,621, NASDAQ just rocketed right past 9,000 yesterday. Good times are here again, it looks like, doesn't it?
Well, it definitely looks like it is a 180-degree turn from where it was this time last year. And so it's been a barn burner this year, especially probably I'd say this last half of the year, really kicking it in. And so, what does that mean for 2020? That becomes the real big question. And you and I have been talking about the slowdown. And not that we're not growing, we are growing, just not as fast as what we used to grow. And so you have to wonder at what point do we start to see that downturn hit?
And that's always the danger, and it sounds like the two of us are infested with really bad stinking thinking when we say it. But you and I were talking before we went on the air. I tend to watch the price-earnings ratio a lot on the indexes to come up with a conclusion as to whether or not they're overpriced at the moment. Well, at the moment, the price-earnings ratio on the Dow Jones Industrial Average, taken as a whole, is only 19.68. That's within a healthy range. But when we get up to these nosebleed territories, you brought up the concern that, boy, oh boy, a couple of those stocks end up showing a slight decline in earnings, and panic can ensue, can't it?
Well, it can, and then those price to earnings ratios start to get catapulted to extremely high numbers, and that's not what you want. In this market, you're right. You and I sound like broken records, and for that we apologize. But I think people really need to be concerned where this market is. Not that you want to, be out of the market, but you definitely want to make sure that within your portfolio that you've got some strategies in place to get out when the time is right for you. I'm a big believer in making sure that you've got a good mixture of, market sensitive assets and then principal protected assets. So making sure that you've got that in place so if the market does start to downturn, what's your plan? What are you going to do before it's too late?
Absolutely. Yeah, the solid advice would be having some growth-oriented stuff, things that are on the uptick, because heaven knows you can make some money off of them. But the person that dumps everything into the high-flying equities right now could be cruising for a real big surprise, because all of us remember that we're around in '08 and '09. Things turned awful doggone fast, so let's party while we've got it, but at the same time, those principal protected assets are kind of like having a designated driver at the New Year's Eve party.
Yeah, that's so true, David, because when you look at it, nobody knows. I mean, if you think back to '08, if you and I think back to '08, what do we think? Hey, it went down 10%. It's just a correction. It's going to bounce back up. Then it was down another 10%. Now, we're in bear territory, and people, were always told, well, just hang in there. It'll turn around. And the problem was it did turn around after it dropped almost 50%. So that's the concern is that at what point are you going to make that move and be disciplined to get out of the market, to move your stuff, or are you young enough to ride it out? If you're 5 years out from retirement, you can't afford a 30 or 40% decline in your portfolio. So that's where the issue starts to come into play.
Absolutely. If you're 40 years old, you might be able to ride it out, but the 55, the 60, and heaven forbid the 65-year-old looking at something, that's where that principal protected element in the portfolio is so important, isn't it?
It really is. That becomes really and truly your foundation.
Understood. That having been said, yeah, it is good for the equities at the moment because it is looking good. Like I said, 105 points up on the Dow yesterday, and that 9,000 number on NASDAQ, it was only about a week or so ago I was saying, by the end of the year, we might see 9,000. Well, heck, we just blew right through it yesterday, up darn near 70 points. It's primarily just trade optimism at the moment that's driving it, isn't it?
Well, I think it's that, and the other fear I have, Dave, is it's the FOMO. It's a fear of missing out that people are jumping in because they're afraid they're missing the gains of the market. And again, I know I sound like a broken record sometimes, but that's kind of what happened in '07. It's definitely what happened in 1999, heading into 2000, when that tech bubble really burst. People were afraid that they were missing out and were thinking that they couldn't lose, but they were sadly mistaken. The 2000 tech bubble is something those of us that are old enough still remember with a lot of pain. I had some friends that were saying, boy, I'm wealthy. I got Microsoft. Well, yeah, Microsoft's a darn good stock, but they were seeing themselves as being wealthy in 2000. After that crash, it took until about 2018 before they were as wealthy as they had been before. Yeah, that's right. And that was a sad day.
It absolutely and truly was. Not a lot of company news to be had today, but Tesla is making some waves, aren't they?
They really are. They have a plant over in China, in Beijing, and Monday they are scheduled to deliver the first 15 Model T3s off of that assembly line to employees of Tesla that are getting those first 15 off the production line.
And a little bit of confidence from Tesla and the construction over in China will be kind of nice when they be able to say their employees have been driving them for 3 months, 4 months, 5 months, and here's the success rate on them, because everybody kind of wonders about Chinese manufacturing.
Well, that and the other thing that people probably haven't seen is that Tesla is trying to borrow $1.8 billion from the Chinese banking system.
What are they doing, swapping it out for cars?
No, I think what they're going to do is they need to expand their plant is what they're trying to do. And so they're trying to, or either that or they're trying to refinance. I'm not sure exactly why they're trying to do it, but I just saw a couple headlines. They're in negotiations for a $1.8 billion loan from the Chinese government.
All righty. The other bit of news that's affecting money today, not necessarily over here yet to the negative, but it's something to keep on the horizon, is there are some indications with reports coming out of Japan that we might have one of our trading partners ending a contraction, I gather.
Well, yeah, that's what it looks like. Now, it's not for sure yet because the numbers haven't come in for the fourth quarter. But if the numbers come in where the analysts and the economists are expecting them to come in, then there's a great chance that Japan may be one of the first countries that their business cycle heads into that contraction mode. You and I have talked about that. We're not there yet. We're slowing. We've been in this expansion mode for a really, really long time. And so, we're really past due for that contraction to really kind of set in for us. And obviously we want to push it down the road as far as we can, but understand that the further it goes, my fear is that the harder it will hit us.
And that's always a concern. Needs to be said for the sake of perspective that Japan going into recession would be profoundly bad news. That's for darn sure. But for some reason, the Japanese economy has been able to kind of insulate itself from the rest of the world, sometimes to the negative side. We talk about the lost decade where Japan was absolutely flat for more than 10 years economically. They seem to have a pretty big economic wall around their borders where they can affect the rest of the world, but not as much as some of the other international trading behemoths do. But still, it's something we want to watch for as the economic reports come out later on today.
Definitely, that is one of the important things to kind of keep a track of, because we are a world economy, even though Japan has kind of become that island among themselves right now over the years. If you remember, I remember like when I was a kid, now everything's made in China. Back then, everything was made in Japan.
Yeah,
so,
Every weird joke that we now make about made in China used to be made in Japan. So you could almost follow past being prologue as well there. Resetting the table this morning, up day yesterday on Wall Street for all of the moderating tone that we're throwing out. It was party time yesterday. Dow was up 105 points, NASDAQ up by 69.5, Standard & Poor's was up by 16.5. Everything was up in the full 0.5% and better range except the Dow, and they were only up 0.33%. 45 minutes before we open this morning, Phillip, what are we looking at today?
It looks like we're going to kind of continue that tone this morning, Dave. We've got the Dow up about 0.25%, along with the S&P 500 0.25%. The Nasdaq's up about 0.4. So everything is looking really good when we look at the indexes. When we look at the commodities side, gold and is basically flat. Silver's retreating just a little bit, down about 0.5%. Down below $18 an ounce to $17.90 an ounce. And then crude oil, it just keeps going up and up. It's up to $61.76 a barrel, up about 8 cents right now. But it is, from what I've seen, we are on it didn't say a 5-year high, but we're really moving in that direction where we're moving back up that scale when it comes to oil prices.
Yeah, it doesn't look like panic level prices yet, but it's definitely up there. Overseas markets, as mentioned, Japan's a little bit nervous, so their market closed off by about 30% overnight last night. Chinese and the rest of the Asian Rim markets, for the most part, green ink. And Europe is having party time today. Everything over in Europe is up by 0.33% or more midway through their day. Phillip, somebody need advice. An appointment from you would be a darn good start to stabilize that retirement fund, take advantage of the bull market, and at the same time protect the principal in your retirement fund. How do I find you?
Devin, give us a call at 863-382-0037. Hey, catch us at our website, statlerfinancial.com, and then check us out on Facebook, where we repost a lot of these videos right here on Facebook. And then just look under Statler Financial Services. You'll find us there. And then join us every weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturdays, 10 a.m. Sunday mornings on News Talk, 7:30 a.m.
All righty, my friend. I do appreciate it. You have a pleasant weekend and a happy new year, all right?
All right, you have a happy new year, and we will talk again after the first of the year.
Got you covered. Thank you so much. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Remember that first paycheck?
Folks, as we end up this year of 2019, I want to thank you for your diligence and listening to what we have on this little, for lack of a better term, little podcast we put out there. I am thankful. I hope you and your family had a great Christmas season, and wishing each of you a happy new year, blessed and bountiful. Have a great weekend. I look forward to talking to you after the first of the year.